Good evening, everybody. This is John Seville from ABCO and Wealth Corp, and here is your executive summary for stock setups for the day ahead, which is open range Friday. All right, so the S&P 500 has rallied straight into that resistance zone. Of course, open range defined by these two levels from the 1st of February. We can see we're right inside that now. So open range dictates that we will close below this range. So what should happen is in the bullish manner, we shouldn't get higher than this level. The best case scenario is that we maybe have a rally up to there in the morning and close right down here. Well, that's not the best case. That's possible. We could get a rally up to here, then close down. That would be good. Even better is we get a little bit of a rally, and then we actually close below that 1920 level tomorrow, setting a perfect open range for a declining week ahead. So there are a lot of good trades, both in the long and short direction. One of the ones we sent out today that we took a put position in, you just want to check, we looked at I bought the 5750 May puts on CRM. They have a lot of insider selling. They've also got earnings next week. Kyle bought the March 5750 puts on the bit more adventurous side, but you can also see we're in a ascending channel and right into key resistance levels going back to where we've been from before. Obviously I'm holding the Amazon puts that we've been talking a lot about, and that rallied right into key resistance also today, and maybe actually breached that trend line as well. So on those two fronts, things are looking good. So, but in terms of getting a bit of setting up some possible plays for depending which way the market goes, I've highlighted with great difficulty my three favorite potential longs and shorts. So my first favorite potential long here is LABU, which again is the biotech bull ETF. Now I already own calls, $7 June calls in LABU, but it's right at support, and a lot of the biotech stocks seem to be kind of acting on a their own kind of steam. So this is one hedge that I'm looking to take against all my short positions, is if it holds above that 9-day moving average, I'll probably add to my position of the June $7 calls on LABU, as it has the potential to rally all the way up to its 50-day moving average, which is currently sitting at $13. So again, there's a 100% potential move there if the biotechs perform well. The second one on my long list is KPTI. It is also a biotech stock, and this looks good as a possible buy. And the way I would trade this is look for an entry tomorrow, kind of where it's currently sitting. But I look at a stop loss at 547, and but I'd be looking at a first target of 783, just under the first Fibonacci retracement, and a second target of 983 under the second Fibonacci there at 38.2. The third one on my long list would be TRGP. Now, this is one we'd already alerted earlier on, but stopped out when I took a position in and stopped out. But as you can see, this has broken a long-term downtrend line and is also just testing its Fibonacci. So as it breaks through the 9 and 20, and as they start to cross, we could look for a pullback on this down to kind of around the 2120, 2130 area as a possible pullback play. But if it just keeps going, then either way, I'd be looking at this as a possible speculative long. And if it's an options play, I'd be looking at the July $25 calls. But again, in terms of potential, this one has dropped a long way. It's exposed to the zinc and copper type of industry, so that's going to be one of its possible issues. But other than that, it's got some steam, and $35 could be a. But if this one really gets some steam, obviously there's greater potential than that. So that's why I looked at the $25 calls, is that it's got a $10 potential rally up to that $35 zone, which is obviously is a significant potential. And again, with a breakout play like this, It's either going to be a pullback to this moving average, again, as I said, down to these kind of areas here around 21.30 or just above, or a breakout through the 50-day moving average, which is at 21.13. So either a pullback or a break of, say, 23.23 would be my entry criteria. Okay, so those were the longs. The short side of the market. CASY's General Stores had a big drop on disappointing earnings, and they have dropped right beneath their declining channel. Now, normally this is a bullish pattern, but as you can see, this could potentially be a head and shoulders. So as we measure the distance between the head and the neckline, as you can see I've done here, we're looking at a drop to basically around $98, $99. So it's not a huge drop. It's a more of a small potential play. So therefore, I'd be looking at the May 105 puts is the way I would play that for a short-term potential move. It could go lower. If we look at the history of the stock, there's a long way it could go. So that's the kind of thing that I would start to adjust as it declined. But as you can see, that type of target is right in line with the high of that candle, which was $88. So 88 would certainly be where I'd be cautious of starting to take some profits. But that would be a, let's have a look here. Am I measuring that correctly here? Let's just go back again. No, so we're looking at the high of $98, sorry, is where I'd be looking at the profit taking. But that's a kind of a conservative but possible play that could decline a lot further. Now they've got so as I said, the May 105 puts are what I'm looking at there. ABCO is my other one that I was looking at. Now this had a sharp breakdown today and had a breakdown yesterday, of course, in a bullish market. So what we're looking for is a breakthrough 37 as an entry point, or well, really that's kind of the best way I would go about this is to make sure that momentum continues. You can see the low of the candle back here is right in line with the Fibonacci's. So the low here was 37.47. The low today was 37.42. So if we break 37, that should give us a clear shot at the next Fibonacci, which is sitting here around $30.24. So that's about a 20% potential drop that I would be looking to take advantage of. And so there on ABCO, I'd be looking at the June $35 puts. But of course, all of these are potential stock plays as well. Last on my short list is TYL. Now, these guys are a tech company. They're selling at a P/E ratio of 73. There's insider selling on this one. And as you can see, they had a very sharp breakdown today, right underneath their longer-term trend. And this is going to be a bit more of a tricky one for an entry point because due to the sharp decline, we could get a bit of a bounce back. And that bounce back could be all the way up to, say, right here around 137, 138. Or it could just be as simple as coming up to the trend line at 128. So it's kind of one of those ones for the more advantageous traders that want to watch it in the morning. Of course, it could just keep declining through the low. So a bit more of a volatile trade as it has already dropped 15% today. But it's something you have to gauge your entry point based on really watching it during the day tomorrow. But what I would be looking at either way is the June 120 puts on this one. So I hope that helps. It's going to be a very exciting week ahead. Open range is set tomorrow. One thing I would caution is that in any of these positions, we're really just taking small speculative positions in these because we do not yet know where the big probability is going to be ahead of the market next week. So for every short position I take tomorrow, I'll be taking a long position to offset it or to hedge against it. That's going to be my way to offset the open range unknown risk. Once we break open range of tomorrow, we'll know where the sentiment should be for the next week until the 1st of next month. So hope that helps, and of course, happy trading ahead. Take care.